Hi, this is Yarka K from Action Your Accounts, and you are listening to the podcast episode 5. And today we're going to talk about the week of how much. So some of you might know, in 2023 I did 100 Days of Lives. I don't know when you're listening to it, so hence putting some more details in. So I did 100 Days of Lives, and as part of it, at this time of recording this podcast, I'm actually halfway through, so I'm on day 51. And I thought I'll do a podcast on the week I did of how much. So I want to cover in this podcast things like how much should I save for my 4 month buffer. That is a potentially a podcast on its own, but I'm going to kind of wrap it up a little bit, and I'm going to put the link because put a link in the show notes because I've actually done a lunch and learn with Enterprise Nation on this one, and I think you'll really find it useful. So, how much should my 4 month buffer be? How much should I pay as if I'm self-employed? How much profit should I aim for? And how much time should I spend doing my accounts? What I'm also going to try and cover is how much it is to outsource to an accountant. We've got a lot to cram in, but I tell you what, if I only finish like halfway, then I'll do another podcast on the rest of it because I think this is really something that everybody should be aware of. And I think you'd find it really useful as well. Um, oh, my screen just went. You'd find it really useful as well um, to to just really navigate in your business and depending on where what stage you're at. So if I'm going to start with how much buffer of how much buffer you should save up for it. So to start with the buffer, is to start with the buffer, you really need to make sure that you know, write a list of all the expenses that you've got each month. Okay, number one. Then put a list of all the expenses you pay annually. The ones that you pay annually, add them all up and divide them by 12 because that's the amount how much you need to then be saving each month. So when it is due, you've got the money in the bank and you can just go and pay it. Put these monthly payments together, add the annual divided by 12 to your monthly ones. And then also have a look if there are um, any sort of differences each month. Look at, say, 4 months and see if there are any difference because there might be, might be paying something bi-monthly, you might be paying something quarterly, there might be different terms for each thing. So just have a look that you've got all of that done. So just write, say, January, how much you've paid, February, March, April, then add the monthly allocation to pay of your annual fees underneath it and add it all up. Add it all up and add all the four as well, divided by 4, and then you'll have an average monthly cost that you'll need. Okay, have a look at what else you pay monthly. Things like salary, things like it's not necessarily a direct debit thing, suppliers that you pay monthly. Add it all up, put it all in there. Okay, make sure that you got it all there. And that's your 4 month buffer. Okay, you'll need to the reason I'm talking about 4 month buffer is I'm not saying that there will be another pandemic, but say you're ill or there is an emergency that you need to get out of business, be out of business for a longer period of time, you'll need to make sure that things are still ticking over. And once you have a 4 month buffer, at least, you can then go and do it without the business falling down. Obviously, you'll need to put somebody in place to keep the income coming in, okay? Because you can't just close your business because of something and then thinking that you're going to pick up 4 months later exactly where you left off. Those 4 months are crucial. You'll still need to take over whether you do it or hire someone to do it. But you still need to kind of really keep your business alive and keep going and doing whatever you're doing. You just need to find a way how to keep doing it or have somebody else can take on whilst you away. And that's your 4 month buffer. And the reason, like I just said, it's a bit like, think about it as a rainy day. Say, I don't know, your washing machine at home goes bust or your, fridge goes bust. You need a rainy day fund to be able to then just go in that bank account, pick up the money and then go and pay, right? So you need the same for your business. So for example, there are businesses, you've got Canva, you've got Audible, you've got Zoom fees, you've got potentially rent, bunch of other things. Just add it all up. Don't leave anything out, because if you leave something out, and then what you might also think about is, when such an emergency happens, put a little asterisk next to expenses that you can let go for those 4 months to reduce your cost. Okay, so if your income keeps coming, but you don't necessarily, you're not planning to do any master classes, so you can, drop your Zoom subscription, because you can pick Zoom subscription again 4 months later, exactly, as you let it, but without having to pay 15 quid each month. So there are things like that. So just have a look. I'm going to put a link. There's a bit more detailed. Um, um, there's a bit more detailed class about it, so you can listen to it a bit more detailed than rather than just 5 minutes. How much should you pay yourself? If anybody is listening to me for a while, you know that I'm a massive fan of Profit First. And Profit First is a way of managing your cash. To manage your cash is crucial in your business. You can either do it via spreadsheet, so you know exactly what it is, but if you find it easier to do it on a go as you go, then you might want to apply Profit First. So there is a book about it. I've done a masterclass about it, which I'm again happy to put a link in the comments. So I'm going to put Profit First in there. I'm going to put Lunch&Learn in the comments as well. And Profit First kind of teaches you to think of percentages, or how much you want to allocate to each other, to each kind of account. So you want to allocate some money to pay yourself, for profit, for expenses, for income. So if you're, or for your tax and national insurance even. So you definitely need to put, if you're a sole trader, put 30% away for your tax and national insurance. Then you want to, if you've never done it before, Profit First wise, then you might want to put maybe profit 1%. You might want to pay yourself, say 20%, and whatever is then left, you allocate to profit, to your expenses. But you need to kind of really pin it down. So you can write a little list. I can do another. I think this is going to be more like an introduction, actually, to a series of podcasts to break these things down even more. I think that's what I'm going to do, actually, thinking about it. See, those podcasts, it's really good to do a podcast, but there's a lot of things that happen as you do it. And I think that's what I'm going to do. So pay yourself, if you've never done it before, pay yourself 1% of your income each month. And then you can double it up each month. So 1 month you pay yourself 1%. It's like, oh, I've never paid myself. Oh, this is good. This is amazing. Oh, I can feel it. That's fabulous. Start paying myself. And then the next month it will be 2%, 4%, 8%. If you are product based, you might not probably be able to pay yourself any more than 30. If you are service based, you might be able to get away with 50, 60. So see, it will be a bit of a trial and error for you to actually figure out which percentage is really good for you, what works for you, what's the sweet spot. Okay. Nobody will be able to tell you what the sweet spot is, because every business is different. So you'll need to figure it out for yourself. But start with 1%, start doubling it up, or just adding 1% each month, and see really where the sweet spot is. How much profit should you aim for? Again, this will be different for service-based versus product-based. And I'd say on average, if you are product-based, your profit will probably be 5%, maybe 10 at a push. 5, I think, really. If you are a service-based business, I think your sweet spot might be around 10, 15% at the most. But again, that might be a percentage for you to aim for, but that's not necessarily what your business is going to end up doing. And how much time should you spend on doing your accounts? How much time you should spend doing your accounts? How much time do you want to spend doing your accounts? And I'm already hearing you in the background. It's like, none. I don't like numbers. I don't want to do it. I don't want to do it. I just want to, outsource it to someone. But you won't necessarily be in a position of outsourcing, and you might want to do it yourself. Okay. And I'm a massive, massive advocate of telling people, do it at least for a while yourself. So you first of all learn how it's done. Second of all, you start to see the value. So if anybody asks you or tells you, that they're gonna charge 30 pounds to do an hour of bookkeeping, you'll go, yes, yes, do it, 30 pounds is fine. I'm happy to pay that. That's amazing. As long as I don't have to do it, I can see the value in it. I can see, your experience and qualifications and everything, and I think you're the best person to do it. Just go and do it, and it will be a lot easier to part your ways with the money, because you'll know what the value is. You know how much you value it. And if you have an accountant, one accountant will charge you £10 to do the bookkeeping, and another accountant will charge you £100 per hour to do the bookkeeping. Okay, I don't know anybody who charges 100 quid for bookkeeping, but you get my message. You wanna there's a way how much you value your time, and if somebody comes to you, like, you'll know whether they're ripping you off or whether they are undercharging, and then the quality may not necessarily be as good, or what's the sweet spot for you. So you need to kind of figure out what where you're at and how you feel about it. But I think you need to do everything at least once to know what the value of it is. So it's a learning curve. It's a learning curve. And I'd say how much time you should spend on doing your bookkeeping, your accounts. I'd say if you reach a 1 day a month or a week, 1 day a week, I think that's definitely time to outsource something, whether it's bookkeeping or the tax return. Um, if it's 1 day a week or even half a day a week, it's already too much, and it's already taking you away from your business. Because when you outsource, you don't necessarily, so you could be spending half a day on doing your bookkeeping, but if you outsource, you still need to keep in touch with your bookkeeping, with your accounts, but you can then just spend an hour on running reports and having a look at the numbers and analyzing what it's telling you. So suddenly you're not spending 4 hours doing your bookkeeping, you're only spending 1 hour. So you already have extra 3 hours a week allocating to your business, and you can do something else with it. That would be my sort of input, and I think that's probably the best way to look at it. So if you're spending more than half a day a week on working on your accounts, your numbers, then start looking at outsourcing. Or start looking at, if you've ever watched my Profit First workshop, what I say there is to outsource an accountant for 4 hours of bookkeeping each week. 4 hours times 3, you've got 120 quid. Put that 120 quid aside each week, and if you miss the cash, if you even have that cash, if you miss it, then it might not be a right time. You might just be able to do 2 hours of bookkeeping, and you don't need to do the rest of it. If you don't miss it, then it's a right time to outsource. That would be my sort of input. So it's all about kind of how you feel. I like to approach things a little bit more in a kind of a holistic way, if you like. I'm not really that much into woo-woo. Yes, I believe into manifesting, but if it doesn't feel right and you start choking at the thought of it, then it's not the right time. Okay, your body is telling you no, so listen to it. So yes, I'm diverting into intuition, intuition and all of that. But it all comes together. If it doesn't feel right, in business, then you probably won't do it, would you? How much is it to outsource to an accountant? It varies. I did touch up on it earlier. Outsourcing to an accountant is a tricky one. It could be a bookkeeper. So you meet bookkeepers and you meet accountants. What a bookkeeper does, what an accountant does, let me get my words out. What accountant does, a bookkeeper can probably do it very, in the same way. They can probably do it as well. What differentiates them is license, experience, and the depth of how deep and complex issues they can deal with. So if you have if you're a sole trader, you've got one business, maybe a property, or you might have 3 businesses and a couple of properties, then a bookkeeper should be able to help you. If you have a one limited company, and 5 directors, you've got employees, VAT registered, a bookkeeper can help you. Okay. depending on what their license is, because there are bookkeepers who can only do sole traders, and there are bookkeepers who don't necessarily don't want to do limited companies, and there are bookkeepers who only do limited companies. So you just need to find one that does what you need. So a few phone calls might be needs to be taken. On the other hand, if you have property portfolio and you start selling your properties, or you are a development property development business, that's a bit more complex. If you have limited company and one of the directors is a company, that can get a bit complex. If you I'm just kind of thinking how complex things could get. Things can get very, very complex. You could have multi-million company with lots of investment branches, but I know that that's not, people at that level who are kind of owning that sort of membership, that sort of businesses. They wouldn't be listening to my podcast, because that's not my ideal client. And if you are listening to this, then I'm sorry, I can't help you. But I guess what I'm trying to say, if your business model is quite simple. When it can also get complex is if you've got three bits. Okay, case study. Had a client calling me and saying, okay, she's got a business. It's registered in England, but she lives in Italy, and her business partner, the other director, is in Pakistan, and they are VAT registered. Okay, that's complex. You'll need a VAT specialist for that, a tax specialist, and not many accountants will take this on. Okay, so that's complex. It might not seem complex, but the fact that the directors live in different countries whilst they have a company registered in England is complex, and not many accountants will touch you. Not the small accountants will not touch you. You might need to go for a big accountancy practice, of potentially 10 plus people, sort of thing. So, and how much it is to outsource to an accountant? You can find an accountant that does, or bookkeeper that does your tax return for 75 quid. I had somebody beating my prices to £90 per tax return, whilst I was charging 200. And he just kept down, talking down on me, how dare I charge that much? But that's how much I value myself. Then that was 3 years ago. I do charge for tax return £250 these days. But there are accountancy practices that charge 300, and I've heard 460. But that's how much they value the product that they offer. Okay, so I've heard stories about. I had a client, and he came to me with a limited company account. He couldn't afford an accountant to actually do it for him properly, but he found a different accountant who only did it for him for 50 quid. I'm like, £50? What is that? But that person, that accountant, they didn't ask him about allowable expenses. They just worked with what the clients sent them. So they didn't ask any questions, director's loan or their mobile, or have they include all their expenses, none of that. They just worked, and they didn't even ask any questions. They didn't even do bank reconciliation. So they didn't match the bookkeeping versus bank statement. So they didn't match it. So it could be absolutely anything, but they just needed to be done. They went ahead with the £50 limited company tax return year-end account, and it's on company's house. If company's house or HMRC ever comes and investigates that business, it's on the business owner head, not the accountant. Okay, so the accountant did their job because they worked with what they had. Okay, so if the client didn't give them all the detail, then that's what it is. So you just need to be really careful. The normal year-end accounts for limited companies are around 1,200-1,500. I know accountants who charge £3,000 for year-end accounts. And if you need audit as well, that will be, again, additional charge for audit. Okay, so all of those things. But you could, okay, I can already see that this podcast is a bit overwhelming. Don't let that put you off. I am going to break down each how much. I've got 1, 2, 3, 4, 5 how much. I'm going to break that down into individual podcasts. So you're not that overwhelmed. This is just an intro. Have a think about this as a little intro. I think I'm gonna leave you at that. You have a lovely, lovely day. Thank you so much for listening to me rumbling about accounts and how much things are and how much you should be saving. This is Yaka K. Have a lovely day, and I'll see you soon.